let's start a new question. A starts business with cash rupees 5,000, purchased goods rupees 1,000, sold goods to C costing rupees 800, for rupees 3,000, cash received from C rupees 1,000, bad debts rupees 2,000, bad debts recovered rupees 600, closing stock as on 31st March 2013 rupees 200. So what will be the journal entries? Number 1, A starts business with cash rupees 5,000 and the journal entry will be cash account debit to capital account rupees 5,000. Then purchased goods rupees 1,000. It means these are the cash purchases. So the journal entry will be purchases account debit to cash account. Now the third transaction is sold goods to C costing rupees 800 for rupees 3,000. These are the credit sales to C. The name of the customer is C. So the journal entry will be C to sales rupees 3,000. Now cash received from C rupees 1,000. This is the recovery from the customer. So how will you make the journal entries? We have to find out two aspects, one debit and one credit. So let's go to the table. On debit side, debit all expenses and losses. No, there is no expense, no loss. Debit what comes in. Has anything come in the form? Yes, cash has come in. So write down cash. Now let's go for the credit side. On credit side, credit all incomes and gains? No, there is no income, no gain. Credit what goes out? Anything has gone out? No. Credit the giver. We have received the cash and who is the giver? The giver is C. So you write down C. So use the prefix to on the credit side and use the suffix of account on both of sides. So cash account, there is no need of suffix of account after C. Now, one thing I would like to make it clear, sometimes the students get confused. They think if we have recovered money from the customer, that is our income. No. When we sell the goods, we receive cash, there is no income. And when we receive the cash from the debtor or our credit customer, that's not an income. So now the next transaction is bad debts from C, rupees 2,000. So what will be the journal entry? Bad debts account debit to C. I explained you in the last segment. Now bad debts recovered from C, rupees 600. You know, bad debts recovered is the income for the firm. So let's go to the table of option. Let's find out debit and credit. On debit side, debit all expenses and losses? No. Debit what comes in? Yes. Anything has come in? Yes. Cash has come in the form. So you write down cash. Now on credit side, credit all incomes and gains. Is there any income? Yes. Bad debts recovered is always treated as an income. And the name of this income is bad debts recovered. So you write down bad debts recovered. So use the prefix of to on credit side and use the suffix of account on both sides. So cash account and then to bad debts recovered account. Have you noticed this money was received from C because this is the bad debts recovery from C, but we have not mentioned the name of the giver. In this transaction, the giver is C, but whenever there is recovery from the bad debts, or you can say bad debts recovered, the name of the party is never ever mentioned.